when Mercury is in retrograde, price generally on average is more volatile than the mean. Eventually Bitcoin's going to see at least 400,000. And then she just pulled up her shirt, said, "Welcome to America." I got titty flashed. And that was my kind of first American crypto experience.
If Bitcoin absorbs the financial system, then I'm going to personally absorb my entire state.
Now, today's guest is a legend in the crypto space. He's the one and only Bitcoin Jack Sparrow. His charting skills are comparable to his doppelganger Johnny Depp's acting skills. And Jack has made price predictions based on indicators nobody else in the crypto space has even considered using. It's my goal today to better understand how he navigates and creates his now famous charts and finds profit in some of the most unlikely trades. Jack, thank you so much for coming on.
Thank you for having me, Scott.
So you have arguably the most unique and fascinating approach to trading and arguably life that I've seen. So how did you develop your system and how would you define it?
It's a long story, but I started out in 2017. Got into crypto in like Q2 2017, and I got wrecked hard pretty early on by buying Ethereum at a local top after it, and then after that it crashed like, I don't know, 60 to 70%. So that was really a moment in time where I realized that maybe as an investor I had an idea about what tech is, and I'm a software engineer originally, so I kind of understood the whole concept, and I could look into the code, etc., etc. As an investor, that was, valuable, but as a trader, I didn't know anything. So 2017, I kind of got into more altcoins and invested in IDs that I really liked, and over time, that was a profitable strategy in 2017. And obviously after that, the market topped in end of 2017. Alts got a crazy rally and then got really, everything got smacked afterwards. So that's where really my journey into trading began. I realized that I had to start to learn pretty much everything I could. And I think my approach to trading has been, the way I learned trading is pretty much just grab anything I could find on trading, any subject, any strategy, any approach, be it price action concepts, Elliott wave theory, Gann, Wyckoff, etc., and just throw it onto a giant pile, see what I kind of thought could work, and just keep throwing shit at a wall and see what sticks. So over time, it became this mix of price and time analysis that's mostly derived from Gann and Elliott wave theory, combined with a solid basis of price action trading that I learned from people like CryptoCred and the Inner Circle Trader. And the three pillars really right now are, I think it's very important to focus on time analysis. And there's a few ways to come at time analysis using geometry, using the golden ratio that we find in nature all over the place. So kind of like using that constant to figure out how over time fractals develop themselves in nature, and applying that same kind of logic onto charts. And there's a part that a lot of people laugh about, which is astronomy/astrology, where major cyclic events in the world kind of correlate with over time. And that's just things I studied deeply and try to quantify as much as possible. And then on top of that, I think it's very important to apply game theory, where we study on-chain and off-chain metrics, but kind of theorize on not just, hey, you have, for example, this is not something I use, but let's say you have RSI and it's at 90, it's overbought on the weekly, blah, blah, blah. What I want to know is why and the how behind the metric, and then theorize why it's that high or whatever. So there's a lot of on-chain and off-chain metrics that give us an idea what happens on the Bitcoin blockchain, and there's a limited supply. So it can only move between hands, to certain extremes, to certain limits, to certain boundaries. So that's something I think is very important to keep in the back of my head. And then on top of that, I think it's very important to just have a very solid price action and technical analysis 101 basis where you kind of know how everyone else looks at the market. So I want to be able to view the market through the eyes of every participant, because the market is a giant organic organism that moves in a way where it's going to enrich the richest in that market. And to be able to understand how that happens, you need to understand how everyone in that organic mechanism thinks and works.
Alpha5 is a new derivatives exchange with a twist. It's the first to deploy the same implied order book technology as you see on the CME, and it's now come to life with the backing of some of the most well-regarded investors in this space. What that means is that you can now, for the very first time in crypto, trade spreads or the price difference between two contracts across all products. You can trade your Bitcoin perpetual swap against the March future, the December future against the June. Whatever your view, no matter how funky your strategy, all the combinations are covered. And it's live now for both Bitcoin and Ethereum. And best of all, forget all the pockets of margin you have to remember. All trades on Alpha5 are out of the same pot of equity, and all unrealized profits are available for use immediately. If you're serious about exploring new strategies, love the idea of yield, and looking to tap into ideas hidden in plain sight, be sure to check out Alpha5. The link in the description below. It's very interesting that you touch on your first foray into trading was basically getting destroyed on buying a local top on Ethereum and losing. And there's kind of a famous truism in trading that the worst thing that can happen to a beginning trader is to do exceptionally well at the beginning, because then they obviously have confirmation bias, think there's some sort of trade god, so to speak, and inevitably lose. So do you think that losing first was a valuable lesson for you?
I think so. I think learning to lose is one of the most important things in trading. Being able to let things go, being able to accept that you're wrong, and being able to look at yourself in the mirror and say, "Hey, well, I did bad. I need to go and figure out what I did bad and do it better." If you can't do that, you're probably gonna get caught in revenge trading. And surely my first investment was in Ethereum. It dropped 70%. And then I actually didn't learn that much about it. The only thing I learned at that point is that I didn't know anything about trading, that I didn't know anything about cycles, about where is a good price to get in or to get out. So that took a long time until I finally got that down. I think by the time of end of 2018, I started to get a little bit of the hang on cycles and supply and demand. But you have to lose. In 2018, I blew an account on leverage. It made me sick. So I've been through the cycles of losing a lot of money and being accountable for it, and then go back to the drawing table, figure out what went wrong, and make sure that was not happening again, etc., etc. So it's a constant process.
Yeah, they say you can't trust a skinny chef. I think you can't trust a trader who hasn't blown up their account at least once, probably two or three times, to be quite honest. So I want to dig more into Gann. I think that that's something that a lot of people have not tried. It's sort of a higher level, I would say, strategy. Can you talk a bit more about Gann and how you use it?
Well, Gann, in its essence, is based on three pillars. So the first pillar is geometry, which is simply uses mostly the golden ratio to find timing and price ratios as price and time develops. And this is also heavily correlated to Elliott wave theory, where waves, both in time and in price, are expected to extend or not extend to certain portions of the Fibonacci sequence and the golden ratio. So that's cornerstone one. The other cornerstone is numerology, and that's kind of a really fishy one. Because Gann believes that everything around us, much like Nikola Tesla was a firm believer of the 3, 6, and 9, that kind of rule the non-physical world, the quantum level, so to speak, where everything has numbers, and these numbers have certain meanings. And then the third thing is astronomy/astrology. Gann found relationships between planetary alignments that cause or have effect on certain global larger cycles. So let's say we take Saturn and Pluto. Every time they're conjunct or opposite in relationship to the Earth, there's been a kind of crisis. So the First World War Second World War, Cold War, 2019, they were opposite in December. So basically where COVID came out. And he uses these patterns to predict cycles or changes in cycles, and it comes down to physics at a certain point where he talks about the solar cycle. And back then they had no like scientific proof for how the solar cycle is constructed, but basically what the solar cycle is it's this cycle where the sun has all these storms, and it shoots out all these electromagnetic particles at our atmosphere. And our atmosphere has this electromagnetic field, it absorbs it, and it does something with the energy level of the Earth. And what we have found now, there's a hypothesis since 2019, is that there's 3 planets in our solar system that actually cause this solar cycle. And kind of like how our moon moves our water on our Earth, these 3 planets, I think it's Venus, Mars, and Jupiter, when they line up in a certain way, they cause for the surface of the sun to erupt more or less. Well, and this has influence on how many earthquakes we have, on weather patterns, on the average temperature on Earth. It's only like 0.1 degrees Celsius that it changes, but you can see how these planetary alignments do have influence, just like the moon has influence on our and the sun has influence on seasons, etc., etc. So that's another thing that he believes in. So he studied that deeply to come up with cycles. For example, corn. He traded a lot of corn. So that's something I just research, and it's just part of my trading. But it creates these narratives or these correlations, and once I find something and I start digging deeper in it, I'm going to try and use game theory and just general simple TA to see whether it actually makes sense, and then I work from there. So I just build layers of confluence.
It's interesting. So I guess maybe the meme in astrology is Mercury is in retrograde, right? What does that mean, and does it actually have an effect?
I don't know whether it actually has an effect. What we can see, we can obviously statistically look at it, what happens, and statistically price when Mercury is in retrograde, price generally on average is more volatile than the mean. Whether that is up or down, nobody knows, and nobody knows whether there's a certain pattern. Maybe some people do, but how I use it when I look at it, I see, okay, well, there's going to be, I don't know, not just Mercury retrograde, but these dates are dates that I just keep an eye to. When I see a very sharp rally up or down coming into one of those key dates where there is an important event and I think it's a top, then it's probably going to pause or pivot. Do I rely on it to make predictions? No, because for me, I need to be able to, I don't know, I need to understand the mechanics of it, and I can't. Like, it's just a statistical coincidence, right? And I do use statistical coincidences if I can nail it down with something else that kind of backs it up, and generally I can't.
So interesting, because you're sort of describing the antithesis of the way that I trade, which is that I've basically removed everything. I just draw a couple lines, set my stop losses and position size appropriately, and go from there. But, I know that there are people like yourself who dig in very deeply to these theories. I'm curious then, when you look at a naked chart, I mean, obviously Bitcoin, we all look at every single day, right? But if you were looking at a naked chart and trying to come up with some fresh trade ideas, some fresh predictions, where do you start? Do you start with the price action, or do you start with these dates? What's the first thing you put on the chart and the first thing you look at?
The first thing I'd look at is define where price started to expand from a certain consolidation and map out the region that was never retested. So basically you have a consolidation, a sideways consolidation, price breaks out, starts to rally higher, and then it comes down. And oftentimes, or not, but not always, it doesn't really reach entirely the level that we broke out of. So that's like an inefficiency that never got filled that I expect that is going to get filled later on. So I map these first. I'm going to try and apply simple alleyway theory on a chart. So basically, where are we in a trend? Are we in a big uptrend on a macro scale? where are we on the low time frames in trend wise, et cetera, et cetera. So I want to get a clear look on that. So I use price action, map out the horizontal levels, then I look at Elliott wave theory to figure out, hey, are we still in a consolidation pattern, or are we in a motive impulsive pattern? Are we trending or not? And that's the basis of where I kind of make up my bias. And then I will look at things like funding on Bitcoin, and the on-chain metrics, how they look. Are people accumulating? Are people distributing on average? Are whale accounts growing? Are whale accounts becoming smaller? And then after that, once I have a good read on that, I'll apply other technicals to see whether it makes sense within that. And through doing this, my aim is to be 80% accurate on the big swing pivot. So the pivots like the 14K top or the 4K bottom. And that's my basis. And then in between, obviously, there's going to be those smaller, more noisy areas that I'll trade purely based on, for example, price action with some, I don't know, simple RSI or something else. But I want to be right about the bigger swings, because that's my base position. If I'm right about that, I can be in full BTC exposure or full fiat exposure, and sleep well, knowing that we're on this bigger move. And if I trade in between, it's just for, to compound a little bit and add, but sleep well because I know that the general trend is still that direction.
How much time do you spend on this kind of analysis and before you really decide, I'm convinced I'm going to enter a trade? And I guess this is the larger swing trades that you're talking about when you build the base of that position.
It's hard to say. I'd say that it's a couple of hours per day in a certain period, where maybe there's certain days that I don't look at it. It's just something that slowly builds in my mind while I try to be patient and try to figure out where the market is, can go and where it's overextended. And then at a certain point, I have a narrative, I have a thesis, and then there's a certain amount of things that I need to see happen. For example, I need to see a massive shift happening in on-chain addresses, or I need to see a massive cascade in stop losses and liquidations. So it's really always, as it always is, like an if-then story. How much time I spend on it, it's really difficult to say, because it accumulates over time. As we reach a certain point in time that may never come, because I could have a thesis and it may never actually get there, happen, validate.
So you're extremely patient.
For the larger swings, I have to, because let's face it, like if we count 2018 bottom at 3K and the 14K top in July 2019, and then the bottom at 4K again, you don't get these many times.
No, you don't. Were you right about all of those?
I was right about the 3K bottom, but I didn't ride it nicely. Like, I didn't ride it to 14K. I shorted it a few times on the way up. I was right about the 14K top. I shorted that one at around 12.6, and I managed to ride it down to 6K, and then I thought it was going lower, but it went back to 10K, so I got screwed up there. And then I shorted 10K to 5K, and then I longed 4K, and now I'm still long. So generally what yes. I do...
Yeah. Like you said, you had the general trend correct, and you made some mistakes trying to scalp it in between, but in general, you had the correct movement.
Yeah.
But that's also interesting, because if you shorted from 10K down to roughly 5 and you bought at 4, well, all of that happened in 12 hours, basically, right? Because the real trend in my eye ended at around 6K, and then you had the BitMEX liquidation engine send price effectively down, into the 3,000s, but it was back at 6,000 when I woke up the next day. So you clearly had orders set. Yeah, you clearly had orders set and were prepared for a bottom and to long it. And I also filled at 4,000 that night. which I wasn't expecting. It was funny. I actually, not that this will end up on the show, but I went to sleep. It was like 6K, and I just jokingly put in a 4K bid, and I woke up and it was 6K, and had no idea that I had filled and was up 50%. I thought the price just hadn't moved overnight.
I'm extremely grateful for something that someone said on Twitter as we came down into that 5K 6K region for the first time. Joe, the Bitfinex, well, he said, "Watch out for the minor collateral. We're gonna see a liquidation, and then there's gonna be a second wave liquidation because the miners who bought 6K or 5K, they might get liquidated as well."
Yeah.
So I closed my shorts, and then I was afraid because of what he said, and then I stopped myself from actually buying at 5K. So I got lucky as well. I mean,
Worked out
let's
well.
be real.
So something you touched on, you said that these theses obviously can take weeks and it's a few hours a day depending on what you're doing. So I want to dig more deeply into your lifestyle because I know it's unique. I know that you're a traveler. You have not been shy about mentioning the role of psychedelics. I think that you have a unique approach to life that probably lends to your success. I'd like to hear more about it.
I don't know how unique it is. I meet a lot of people who do the same, maybe not the trading part. I mean, if you're talking about my day-to-day schedule right now, I wake up when I'm rested. I'll check the charts. I'll check the funding. I'll check just a few basic metrics, whether we're still going in the right direction. If necessary, I'll try to find places where, if dips happen, where I want to be a buyer, and I check on my asks in this case because it's an uptrend. I drink a few cups of coffee. I have an old company that I set up 8 years ago that I'm trying to do some work for now as well. They're trying to innovate a little bit, so I got that still going. Then sometimes I have calls because I'm an advisor to some projects. Right now, after that, I take off. I go to my truck. I bought a truck, a van. It's kind of like a truck van. It's big. I'm building it into like a self-sustainable, outside of food thing that I can travel around with and power 2 desktops and work and get a bit of a beach life back that I cannot have right now. And traveling with an airplane to the tropical areas is kind of shitty at this very moment. So this is like my substitute for that. I hope to be ready in about 2 months and then travel to the south of Europe. Hopefully it's warm enough. But generally what I try to do is get away in winters, spend 3, 4, 5, 6 months in a tropical place, surf, regain energy, reload energy, see whether there's new ideas that I want to pursue, reflect on life. And it's been very nice. I mean, my mom has manic depression and I genetically have, I don't know, I'm sensitive to it. So it's very important for me to make sure that, especially during winter when the days are pretty short, that I manage my energy levels and that I get outside enough. And it's just very difficult in winter for me to make sure that I get that, it's the weather is shitty. It's hard to motivate myself.
And how much does that affect your trading? Have you found that if you didn't travel during the winter and you were stuck inside and the weather was bad, that your performance is worse? Or that when you're out surfing in Bali and you come back and quickly check a chart, that you're more successful because you're happier and your mood is better? How much does your outside life affect your profitability?
A lot. Trading is a mental game. And if you're not well mentally, it's gonna screw with everything. You're gonna be emotional about things you don't want to be emotional about, that you're normally not emotional about. You're gonna try and ignore negativity, maybe run away from your problems. So you gotta face it. But facing reality, how tough it can be, is difficult when you're not in your happy place. So it's very important for me to to keep track of that and make sure that I'm happy and that I do the things that I require to.
Yeah. I I've never understood the people who can, trade 20 hours a day staring at price action the entire time and never take a break, because I like you, require that positive mental space. I have to work out every day. I have to do, certain things to detach myself from trading. It sounds like you're very much similar. So I want to dig into some of your past trades. What are some of the best trades that you've ever made that you can remember?
I'm not sure if it's my best trade, like profit wise. But the short I took from 10K to 5K, I had I don't know, that just felt so. It happened so quickly. It it hit my levels. Like I managed to write a lot of that move. I'm really happy if I write 80% of a macro thesis I have, but I think it can be beaten by my current trade. If I manage to close my current BTC longs that I started to build up from 4K and then every dip up, if I manage to close that around 18 to 19K, that's probably going to be my best trade ever. My worst trade, I don't know, I'll probably mention two. My worst trade was after I longed the 3 point something bottom, 3.6 or something. I went short at 6K. I think a lot of people did. And
Yeah, blew right through.
it I don't know whether it reached 6K exactly, but like 5.8, and then it blew through. And that one hurt a lot because I was really convinced that 6K was going to hold. So basically I made a nice profit on that move up, and I more than lost that on the move afterwards. I was way overexposed. I took a really big dent in my portfolio back then, and it was really hard for me after that to let price action actually run sitting in spot. I really wanted to take a revenge trade and thinking like, okay, well, this is now resistance. This is now resistance. We have to come back. And the thing obviously just kept on going until probably everyone was liquidated at 14K. So that was a really bad trade. And I do remember that once, but that's not really a trade, but I bought Dragon Chain in the ICO and I didn't sell. Like, well, eventually I did, but I kind of lost like at least 50% from the top before I decided to let that bag go, and it did an ADX. So you can imagine that was a pretty sour lesson to be learned.
Either in monetary terms or percentage of portfolio, like how big of a loss are we talking about here on these trades?
On that short I took at 6K in 2000, early 2019, we're talking about like 25% hit on portfolio. That was brutal. And the Dragon Chain thing, I mean, back then, this is early 2018, and Dragon Chain was 60% of my portfolio at its high. So you can really see how I was
I've
still
been there.
learning, because I would not do that again, but obviously I did. And that halved. So, take 60%, take half of that, 30. So that was probably a bigger loss, actually.
Yeah, if you count the gains and then count losing the potential gain, those tend to definitely end up
I
being
mean,
the biggest losses in my mind as well. I think in
yeah.
the loss, the theoretical loss sometimes is much more painful than the realized loss, because you know that what you could have had, right?
Mm-hmm.
So I'm curious, you've touched on these losses, obviously, and I want to dig into what I believe is the most important part of trading, which is risk management. We have a good idea now how you approach a chart, how you approach a trade, how you find your areas, but what are the key facets of managing risk for you?
In the basis, I want exposure to market when it has direction on the macro swings. And I'll start building that once I have a very high conviction that it's actually a top or a bottom. And I'll start slowly. I'll just start regularly, like using a 1% risk or 2% risk trade with a very nicely defined stop loss that when it's hit just loses 1 or 2% of my entire portfolio. And the target has to be reasonable within that range I'm trading. So nothing too big, nothing too far, nothing too high. And once that position is built, there's going to be another opportunity within that same range or in the next range, et cetera, et cetera. I try to add to that as fast as possible and grow that position until the moment where I reach, on average, a 1x leverage position on my entire portfolio. And I try to do that with my stop losses at a level where I still don't lose more than I initially risked, the 1 to 2%. So I keep adding, and as the trend develops, I will keep doing it. And as price moves away from my entries, I kind of have lower risks that I can redeploy if my thesis is correct that the trend is gonna continue. And when it's about trading the noise in between, it's generally just taking ranging from 0.5 to 2% risk on my account on the current day's balance. And it very much depends on how much confluence I can build from different systems that I like to use and that I can quantify to a certain extent. And then I have this threshold for noise trading where I go max 2%. But when it comes to the larger swings, I'm allowed to go to 5% for initial risk when I'm really sure of it. And then I keep on adding the unrealized profits back into it. So I keep building and compounding that position until I get where I want to be, and then I exit. So right now, I'll probably have my stops at 10% risk on account. But considering, not even sure how much it did, but quadrupled this year, I'm fine with that 10% because it's just giving back unrealized profits.
Right. It effectively amounts to a effective trailing stop, because you're so far into profit. So it's not like your stop losses are below 4,000 where you entered the entire position, right? So how do you manage the allocation of your entire portfolio? Are you trading when you calculate your stop loss or your position size, that based on the entirety of your portfolio, or do you have a trading stack and then some Bitcoin that's in cold storage? How do you manage your overall portfolio?
I think in the basis, I want to have a dominant exposure to a dominant asset. So if I think Bitcoin is bearish and we reach a high time frame pivot, it's going to be USD. If I think Bitcoin is bullish, I want it to be Bitcoin. If I think Ethereum is going to go on a big run, I measure my portfolio in Ethereum, and I just measure the risk on everything that I do trade, even if it's in cold storage. I don't really care. That's part of my portfolio. That's part of what I have risked, what also can go to zero. And then I do have savings and other sources of income that, keep me alive and buy my food. And I try to keep as much in crypto as possible. Sometimes I'll take profit, but most of what I do outside of crypto is enough to facilitate my living. And I have such a high conviction on crypto that, taking some profit when it's necessary, when I cannot afford to buy things with all my other sources of income, sure, then I'll do it, because you got to invest money to make money. But if I don't have to, I won't.
It's interesting. I heard you touch on this specific trade that you're currently in, and that you would be looking to exit 18,000, 19,000, that area just below the previous all-time high. Is that your longer term price prediction, or is that just where you're looking for the trade? And where do you think that Bitcoin can ultimately go, and on what time frame?
It's difficult. For now, I am looking to close the thesis from earlier this year in March. And I want to close out all leverage long exposure at 18, 19, 20K. I don't really care. If I do it at that point, I've ridden 80, 90% of that move. So I'm very glad. And if it continues, fine. I'll find another entry later on and build a new thesis around it. But I do think that we're going to top out closely, maybe within the next week, see a high, and then correct anywhere in the neighborhood of like 20 to 35%.
I agree.
And see a pullback, whether that pullback is going to be to 12K, 13, 14K. I think all this entire region of 12 to 14K is an absolute beauty if we get it. So if the market gives it to it, then I'll start building a new long position and see where we go from there. Long term, I've had Gann analysis and other types of analysis that lead me to believe that eventually Bitcoin's going to see at least 400,000 but I don't know when that's going to happen. That time analysis suggested 2023. But it could be as early as December next year, which sounds crazy, but it would just be a copy of the 2017, 2016 rally to go to 400K. It would literally, on a logarithmic scale, would be the same. So I doubt whether that is going to happen, but I do think that we're going to see north of 100K easily by 2021. And by 2023, I think we're going to see a massive cycle top, basically from genesis of Bitcoin to its first big long-term cycle top, and then see a kind of like second wave correction into the end of the 20s, early 30s. And maybe then Bitcoin can become a reserve asset. So that timeline for Bitcoin becoming a reserve asset, if it ever will be, for me is early 30s. So I don't know. Before that, at least 100K, could be as high as 400,000. Is Plan B going to be right? Maybe. He called for 1 million. I don't know. Sounds high, but we'll just trade it.
At 400, right, of course. It's fun to talk about it, but I think you just drilled into something essential, which is you can have your overwhelming thesis, you can talk about these long-term price addictions, but what really matters is your profitability trading it in between. And when I'm curious, when you talk about Plan B and stock to flow, I mean, at 400K, we're talking about an $8 trillion market cap, right?
Yeah, that's gold. It doesn't seem far-fetched that we're going to match that at some point. And it doesn't seem far-fetched to me that Bitcoin is going to be worth more than gold eventually, because it's a whole new technological innovation that's going to absorb, I think eventually is going to absorb all monetary intermediaries that we have in the world right now. So if you look at Amazon, how Amazon absorbed all retail energy or retail shops, et cetera, I think Bitcoin is able to do that on a monetary level and on a financial derivative level, et cetera. So that's a massive market we're talking about eventually. I don't know what time basis is going to do that. Maybe if the entire world goes crazy, FOMO, bing, bang, boom, it could be way faster. But 8 trillion, I don't know. I think we're going to match gold at some point, so it doesn't seem too far-fetched.
What do you think would have to happen in the world for Bitcoin to achieve that level of market cap and adoption?
I think we're going to have to see people, pension funds, banks, countries, companies realize that owning Bitcoin is a way of preserving wealth, and that the fiat they store on their balance sheets is just devaluating. So if they just sit there with their fiat, keep it for the next 20 years, it's going to be worth zero. So basically everyone with a pension is going to have zero pension. Everyone who has money in the bank will have zero money. I think Bitcoin is going to be this thing that you either understand and buy into, or you don't and get left behind. But that's my that's my thesis on the fundamentals of Bitcoin. I think Bitcoin is going to absorb the financial system in a way that we haven't seen since that we accepted the gold standard. That's what I think is going to happen. So if you look at what gold did in 1918 to 1928-ish, and then later on, I think we're in that kind of phase with Bitcoin. So I think the next couple of years are probably the final phase of Bitcoin to appreciate in value, and then we're going to see a big, giant correction.
If Bitcoin absorbs the financial system, then I'm going to personally absorb my entire state.
Yeah,
make it my own kingdom. You can come with your van, though, your truck van, which by then will be able to fly. I'm sure if we're absorbing.
I'll buy the state next door.
Perfect. It's interesting. You talk about a move to 300, 400,000, and zooming out, and that being basically the first wave of an Elliott wave sequence, correct? So when you talk about that second wave, you're talking about dropping from 400 back to 100 before the next move up or something, right? Or an 80%, even an 80% bigger retrace on that parabolic move.
Yeah, probably. Yeah, I mean, if my timing is correct and we see a top in like a massive top in 2021 and then again in 2022 2023, which I think is the most plausible and logical from this standpoint. We're easily going to have like 6 to 9 years of sideways or corrective price action before anything interesting is going to happen to Bitcoin again. So, if it goes to 400,000, it might have like a 6-year bear market or a 9-year bear market back to, I don't know, 50K. Who knows? And then maybe someone is going to figure out, hey, we should make it a global reserve currency, and then it's going to rally again. But if it doesn't rally, it's probably going to retrace altogether, because if it's not going to be a reserve asset by not like 2032, I don't know if it's ever going to be anything after that. So let's just trade whatever comes our way, and I'm going to be an irrational bull, but not trade the charts like that, hopefully.
So what's the funniest story that you can tell from the crypto space?
Well, I it's just like I met a bunch of people from crypto Twitter twice in America, and the craziest things happen when you go to these conferences and you have these parties and you meet all these people who've made a ton of money out of nowhere and want to share and show to the world they have a lot of money. So you are in these clubs with all these people who have, I don't know, need to prove they are alpha, and they want to spend a lot of money. So one time in Chicago, I'm not sure if this is appropriate for your show, but we were in this place, in this club. I walked in, it was my first time visiting America, and we went up to the stage in the back, and then there was all these girls on stage like dancing and pouring champagne over each other. And this girl came to me like, hey, you don't look from around here. Are you from America? And I said, no, I'm not from America, but these are my friends. They have like a lot of crypto, blah, 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 blah. And then she just pulled up her shirt, said, welcome to America. I got titty flashed. And that was my kind of first American crypto experience. So yeah, that's probably the funniest story I have. Welcome to America.
Well, I think that's actually probably accurate, right? I don't think the Statue of Liberty does that, but I think that some other people have that experience. So I'm interested to hear how you became so famous in this space, because all of us just sort of, you start at zero, right? And you start sharing things, and there's this community, and then all of a sudden, people, I guess, have this magnetic attraction, and they're attracted to what you're doing, and they start following you. But how did that happen, and what does that feel like?
I don't know how I feel about the word famous, but I don't know. I think I just had my own way of looking at the market. I didn't give in to etiquette in a way that like when I started out and I shared all these different ways of looking at the market, I got called out by bigger crypto Twitter accounts, and I got a lot of shit for it. And frankly, I wasn't bothered by it, or I would just reply to it, and I just kept sticking to how I viewed markets, which is a different way. And initially I got a lot of shit for that. And I think just sticking to what you do, be consistent, share with the right intentions, and interact with people is what resonates with people. And maybe the way that I look at markets differently than most people do, or try to figure things out in a different way, I think that resonates with people. And how do I feel about it? There are some scary people out there on the internet. Mm-hmm. So I do realize, and I do have encounters where I don't feel comfortable. People ask things and I'm like, I don't know if I should answer that. Or people, are like coming up with things about your personal life, and you're questioning whether they could really know or just guess right. And then you're sometimes a little bit afraid of what's going to happen next. Like there's going to be a lot of new people. If a new bull run's going to come, there are a lot of people who haven't matured in this market, so they're going to be more emotional than the current crew that sits on Twitter and hasn't gone through this emotional, machine crunched to little pieces and then came out of it as a better person. So I don't know how I feel about it. It kind of feels great to have a lot of people who listen to what you have to say, and at the other side you realize that getting all that attention is not always positive and not always good. So I really hope that people are just going to be rational and nice to me going forward. So yeah, I mean, I like the fact that there's other people who like my work. It resonates with me in that sense.
So you just touched on a huge issue, which is unique to crypto traders, probably, which is security, right? How do you make sure that you are secure when you're out there traveling and people know your face? What are the key steps that any crypto trader should be taking to protect themselves and their assets?
I mean, don't travel with your cold storage. Don't, like, I've done it, but I've never felt relaxed. Like, don't do it. What I do is I have a I don't I'm not gonna even I cannot even actually say this how I do it, but like let's say that I have a three-step system that involves trust to get access to my cold storage anywhere in the world. That's one thing. And I mean, I'd make regular backups of everything I have. I encrypt most of my hard drives that have valuable information about who I am um, or the things I've done in the past. And I make backups. So, if
Yeah.
shit gets stolen, I can back it up, reboot it, buy a new computer. Make sure that you have multiple ways of getting cash, not just a credit card and not just, I don't know, a debit card. Just have ways to, if your shit gets stolen, make sure you can get access to money to buy a new
Yeah.
laptop if your laptop's stolen as well.
Yeah, that all makes sense. So, what is your best advice to new traders, having gone through the entire cycle, lost money, gained money, and everything in between? What things do you think that brand new traders should focus on?
They should focus on learning how to develop a system, not necessarily copy or use a strategy from someone else, but learning how to construct and validate data setups. I think that's the most important part because once you do that, you create a framework for yourself where you can validate and quantify your wins, your losses, and analyze what went wrong and actually do it better next time. The other thing is, I don't know, it's really hard, and everyone's probably gonna trip on this, but try and own fear and greed. So, um, the earlier you can get a hold of these emotions and just look at a market and understand what's going on in the market instead of being scared of what your position is doing, the better you're gonna perform in the market. And I guess learn how to lose, literally. Like, like get a significant sum of money that is significant to you, but not too much that you're gonna die if you lose it. And once you've created a little bit of a framework, start trading it and expect to lose it and be okay with losing it, but make sure that during that time you manage to find the flaws in what you're doing and come back and redeploy some money and get better at it. Sounds sketchy, but that's how it went for me. So I
I
cannot
think
give
you
any
have.
advice.
I think you have to lose. I
Yeah.
agree. You have to lose, and it has to be meaningful. Unfortunately, anyone who's just won is just waiting for that huge loss to come.
Yes.
Right? It's just nobody starts off winning and never experiences that. In my mind, maybe there's some like unicorn out there who time the market perfectly, but I just don't see that to be a thing. And I want to know, what's your end game? What's your goal as a trader? Like, why trade? Where's the finish line?
I think the finish line for me is I think I'm never gonna meet the finish line. But I'll probably shift to less active strategies and just more of a hedging strategy over time. But my end line for now is going to be where I think we're going to see the monetary absorption climax of Bitcoin. I'm just very fascinated by Bitcoin itself, and I'm probably going to trade other things in my life, but Bitcoin is just this thing that outside of what trading is just fascinates me about how it's constructed, how it's built, how it's this um, community. So that's just fascinates me. So I think that top is going to come in 2023, and after that, I'm probably just gonna. I want to buy some land. I want to build a house. I want to have the experience of building a house with my own bare hands, start a family, raise kids, live at the ocean, enjoy life, and see whatever else comes on my path. So that's really my end game.
Nice. I've got all of that except for the ocean, but I am in Florida, so I'm not too far. I wish I was closer on a day-to-day basis. Well, I think that
Sweet.
we've dug in pretty deep, and I really appreciate you taking the time. You have such a unique perspective in the way that you approach markets and that you approach individual trades. I think that there's a lot that people will learn from this conversation. So once again, thank you for taking the time, and I look forward to catching up at 300 or 400,000 in Chicago.
Sweet. Thank you too.